All right, aloha everyone. Thank you for joining us for today's National ANA webinar, Federal Regulations and Cost Principles, Part 2 in ANA's Project Implementation Series. Today's webinar is presented by the Administration for Native Americans and the Pacific Region Training and Technical Assistance Center. My name is Matt. I'm the guy in the brown shirt you see there on the screen. Next to me on my right is Napua Harbottle, the training specialist for the Pacific Region Training and Technical Assistance Center. Next to her is Dennis Wong. He's a technical assistance specialist. Susan White is next to Dennis in the black shirt. She's also a technical assistance specialist. She's a veteran with ANA and federal grants, and she'll actually be leading today's webinar. And then next to her, all the way on the right, is our Regional Director, Keone Nunes. And if you'd like to learn more about the Pacific Region Training and Technical Assistance Center, you can go to our website, anapacificbasin.org. Today's national webinar is being made possible by the Administration for Native Americans. ANA promotes self-sufficiency for Native Americans by providing discretionary grant funding for community-based projects in training and technical assistance to eligible tribes and Native organizations. And ANA's vision is that all Native communities are thriving, and ANA is continually working towards that vision to make that vision statement become true. And ANA is a part of the Administration for Children and Families, which is housed in the Department for Health and Human Services. And all of the cost principles and regulations we'll be going over today come from DHHS, the Department for Health and Human Services. We have a few more webinars coming up in the month of November. On November 7th, we have the Part 3 of the Project Implementation Series, which will be on reporting. November 14th, we'll have a webinar on preparing native language teachers. November 20th, grantee governance success stories. And then on November 21st will be the fourth and last part in the Project Implementation Series on continuations and grant amendments. And you can find all of those webinars on the events page of the ANA website. And the URL to find that is there on the screen, www.acf.hhs.gov/program/ANA/events. And you'll find links to register for all of these webinars as well as some other ones there on the events page. So in today's webinar, we're going to be going over some regulations and cost principles from DHHS. But here are the goals that we have for all of our participants today. Our first goal is to help current and future grantees understand the regulations that govern the use of federal grant funds. So the webinar is not just for current grantees. Even if you are planning on getting some type of federal grant or just want to become more familiar with federal grant regulations and rules, then this is a good place to get that. Also, goal number 2 is to equip you with the working knowledge of federal financial management regulations. And then number 3 is to provide you with resources to evaluate the allowable costs that can be charged to a grant. And for today's webinar, we'll be using kind of a basketball analogy to help you understand all of the different players involved with managing a federal grant. So like I said, today is Part 2 in the Project Implementation Series. Part 1 on planning and organizing was done about 2 weeks ago. And that should be available as a recording through the resource library of the ANA website. Part 2 is today, regulations and cost principles. Then Part 3, reporting, and Part 4 is on continuations and grant amendments. And at this point, I'd like to hand it off to today's presenter, Susan White. Susan has decades of experience managing federal grants, and she's really a master of the Federalese language, and she'll be making all of these difficult concepts easy to grasp. So at this time, I'd like to hand it off to you, Susan. It's all yours. Sorry, Susan, you might need to turn your mic on.
Okay, sorry you guys. I was really talking to myself here for a while. Okay, but before we get started, why don't we let Rosie talk a little bit about some of the questions that she had as they were implementing their new grant. So Rosie, tell us a little bit about your project, and then why don't you tell us the questions which they can read on the screen that you ran into as you began implementation.
Talofa again, I'm Rosia Tavita Curry, the Financial Officer Consultant to Lefetuao Samoan Language Center. Lefetuao Samoan Language Center is a nonprofit organization based here in Honolulu, Hawaii. Lefetuao received an ANA Native Language Preservation Maintenance Award for a 3-year project, and the goal is to ensure the survival and continuing vitality of Samoan language and culture for future generations. Mainly, the 3 objectives throughout the 3-year project is to develop a Samoan language curriculum, conduct teacher training, certifications, and expanding sites for language classes. Currently, there is 1 site and classes are offered on Saturdays. So, as the financial officer, the program manager, and I work closely together to make sure that the budget costs are allowable and in compliance with federal regulations. As we were implementing and starting off the project, these are some questions that have come up. The first, do we have to get cost quotations for everything we buy? We want to send an extra person on an out-of-area trip. How do we go about it? Can we use grant funds to purchase t-shirts for the students? And can we purchase toilet paper for the school? It may sound like an odd question, but you never know. So stay tuned. Towards the end of the webinar, we'll find the answers to these questions. Thank you, Susan. Papitai.
Okay, thanks, Rosia. Okay, and as you can see, since we're using basketball, this is Rosia's team, or a team that we found, that Matt found a picture of. All right, so let's get going on this. And you know, the reason we use basketball is because we are talking about the rules and regulations, which, you know, I find them quite exciting. Other people really don't. So, but it's just like anything else that we do. When we talk about, we're going to be talking about 3 different rule books, all right? So in basketball, you have your rules. Okay, in financial regulations for grants, we have our rules. And where those are located is they're located in the financial management regulations, and they're located in the cost principles. Now this 3rd book that I have, the HHS Grants Policy Statement, why that is really helpful, because that's like the referee's rule book, all right? And so it's really good to know what they're looking for. And so we're going to be talking a little bit about that and how it relates. And although we're talking about HHS, I really want to make this clear. We're talking about the Department of Health and Human Services. You know, what we're talking about really applies to all federal grant funds. There's a little bit of difference between the different federal agencies, but really if you have currently federal awards, or if you're looking to start applying for federal awards, this is some of the information that you will need to know in order to manage those awards. All right, So let's take out our first rule book, all right? And that's called the Financial Management Regulations. And where you'll find it for the Department of Health and Human Services, of which ANA is housed in, is in 45 Code of Federal Regulations. So we'll say 45 CFR, all right? And then for governments such as tribes, it'll be in Part 92. And for nonprofit organizations and colleges, it'll be in Part 74, all right? I know all of you are just excited to go out and read it. Let me give you the cliff notes on it. It's divided into 4 different areas. The first area, subpart A, is general, and we're really not going to speak to that very much today. It includes the definitions and some administrative information. Okay, the second part is subpart B, which is the pre-award requirements. We're only going to talk about one area there. Right, and then we'll get into that in a second. Now what we're going to spend most of our time on is subpart C. And for those of you that are current grantees, that's the post-award requirements. This is the big one that you're in right now, so we're going to devote quite a bit of time to that. And then the final part is after the grant, and we'll spend just a brief minute or two on that. All right, so let's get right into it. Okay, this is the topic that I was telling you about in pre-award conditions. And it's something you really need to be aware of. And they're called special restrictive conditions of awards. And what that means is that if you have not complied, or if your standards are low, well, what it says here, a history of unsatisfactory performance, you're financially unstable, you have poor management standards, or you haven't conformed to prior awards, all right, then you'll be considered a high-risk grantee. And how we relate that to basketball is like getting a technical. You get thrown out of the game. But the real point here is if you ever hear mention of high risk, you really need to find out what's happening, you know, what's wrong, and work with your funding agency to find out exactly what conditions they consider you high risk and what corrective actions you need to take. That's the important thing, right? So high risk is something to really perk up about and find out what's going on with that. And that's covered in the pre-award part of the regulations. Hopefully none of you will ever hear that term throughout your life of managing grants. Now let's get into the post-award, all right? And these are very key. These are called the financial management standards, and all of your financial systems have to meet these standards. So this is real important. The first is that you have accurate, current, and complete disclosure of all financial activities. Well, what that is that they have to be accurate, and this is where the program people are so critical to finance people. You're just key to it because you have to tell us what to charge certain expenses to. All right? We need to know, especially if you have multiple funding sources. You have to be current, we have to have current, finance needs to have, and I keep saying we because I'm a finance person, so bear with me on that, you guys. But finance needs to have current information. That means if you go on a trip, you need to turn your travel expense report and the receipts in right away. All right? You need to turn any invoices that you have into finance right away. And then complete disclosure means all of the financial activities have to be in the accounting records. And, you know, where that comes into play especially is like if you're generating program income and for your non-federal share. All right, so it has to be complete. The second standard is that you have to identify the source and application of all funds. And what they're talking about here is maybe, and most of you have multiple funding sources. So say that you have a language department and you're getting funding from the Administration for Native Americans, you're getting funding from Department of Education, then you also have a private foundation grant. Okay, well you can't just charge a cost off to language. You're going to have to say, is it A&A, or should I charge it to Department of Education, or does that go to our private foundation? And in the accounting records, we'll track all of those separately using the chart of accounts, how they're coded. But that's the important thing. Also, for those of you that work on multiple grants, that means your timesheets need to reflect how many hours you're spending on each one of those grants. So that's real important that you have a system in place that documents that. The third standard is effective control and accountability for all assets. So you have to safeguard the funds and any equipment or anything else that you may have that was purchased with government funds. And how we do that is like with timesheets. A supervisor will sign that the employee did work those hours. Or with purchase orders, whoever approves the expenditure, that's the person saying, yes, this is allowable cost and that. And so remember, don't ever just blanket sign everything for those of you that supervise people or can approve purchase orders, because that's a real important part of the control system. It's why we keep blank checks locked up and things like that. And you do have to safeguard and have the procedures in place to ensure that you're doing that. The fourth one is you have to compare your actual expenditures with your budget expenditures, right, on a periodic basis. Now, it doesn't specify in the regulations what that periodic basis is. It could be monthly, it could be quarterly, it could be every 6 months. You're going to hear a lot of my personal opinions in this webinar also, you guys. Okay, I think it should be monthly because, you know, if you're overspending or underspending in a certain line item, you want to catch that quickly and you want to take corrective action. So that has to be done. So make sure you have those reports. Okay, the next one is that you have to follow the cost principles, and we're going to speak to that after these. So I'll talk about it then. The sixth one is that your accounting records have to be supported by source documentation. Well, examples of that are your timesheets, their invoices, their travel expense reports. There has to be some type of paper that supports each one of your expenditures. You know, kind of a rule of thumb that we have here is that the copy of the check doesn't get filed if there isn't paper behind it. So that's real important. And that goes for your non-federal share as well. Remember that. So you have to have those sign-in sheets if people are volunteering their time, or the receipt of goods if people have donated things to it. And all of that's very, very important to keep throughout the life of the grant. Then the last one is that you have to have procedures to minimize the time between when you receive funds from Federal Treasury and when you disperse those funds. So, and what that time period is, because if you're getting A&A funds and you're getting in advance, you're getting it through the Division of Payment Management. And so you have 3 days between receipt and disbursement. And I get a lot of questions about that. Can we, you know, draw down a month at a time, or can we draw down 3 months at a time? If it's an advance, now this is for advances. If it's an advance, you can only have 3 days cash on hand. And you really want to watch this closely, because what will happen is if you do draw down excess funds, okay, your account will be frozen. And then you have to, you know, provide information and why did you have too much cash on hand. So be real careful about your cash management of these grants too. And that relates to advances. Now, if you're meeting all these standards, then it's just like hitting a three-pointer. I mean, you're in good shape. You're going to score really, really well, all right, as you move through this game. Okay, the other thing that's addressed in the regulations is payment. Okay, there's basically 3 methods of payment. You know, you can get in advance, which you are allowed to do if these are A&A funds. In fact, for most federal funds, if you meet the financial management standards, you can request advances. Very similar to paying for your ticket to the game in advance, all right? If you don't meet standards, though, you could be put on reimbursement, which means you have to spend the money first and then request reimbursement for what you've spent. Well, for a lot of nonprofits and even governments, too, it's very difficult to front the cost of a grant. So that's why the financial management standards, it's so important that you adhere to those. The third type of payment is working capital advance, and that is, if you can't run the grant, you can ask for a working capital and it gets liquidated throughout the budget period. And I really haven't seen that ever put in play very often. The financial management regulations also address the cost principles, which we're going to talk about after we get through the financial management regulations here. Okay, when can we spend the funds? What's the period of availability? Just like a shot clock, there's only a certain amount of time that you can spend the funds for, and that's called the budget period. So you're going to want to look at your notice of grant award and see what the budget period is. Say that you have a SEDS grant. Well, your budget period is September 30th of 13 through September 29th of 14. It's the only time you can expend the funds. What you really have to be careful of here is your cutoff dates. Like say your pay period ends on September 30th. Well, guess what? One day of that pay period has to be charged to your next grant, and the rest of the pay period is charged to your current grant. So always watch the cutoff date and look at your budget period, because that can be, and in A&A's case, is different than your project period if you have a multi-year grant. You may have a project period for 3 years, but the budget period may only be for 1 year. And the budget period is when the funds are available. So always watch that, especially cutoff dates, you guys. Okay, program income. Let's talk about program income. All right, program income, what it is it's any income that's generated by a grant support activity, or you earn it as a result of a grant agreement during the grant period. Now, program income is a really good thing, all right, in A&A's case, you know, because what it allows you to do is it allows you to expand what you're doing. Just like say that you sell food at one of your events and you generate money from that, but the staff are being paid with grant funds. Well, it automatically becomes program income. And in A&A's case, they allow it to be an additional cost. So all of you check your Notice of Grant Awards and look in box 21 and make sure it says additional costs. And the reason for that, because if it's silent on how program income will be treated, okay, it will automatically default into what's called deduction. And you don't want to go there, because if you generate program income, it'll reduce the size of your grant. That's the default on program income. So that's kind of good advice for any federal funds you get, is that check to see how program income will be treated. Even if you don't plan on getting it, you never know. And always ask for additional, okay? And then the third method that it can be treated at is cost sharing. So if you wanted to say our non-federal share will be through the program income we generate, that would be called the cost sharing portion of it. But again, look for program income, and you are going to have to track it. Remember, one of the financial standards was accurate, current, and complete disclosure. Okay, well, that means you are going to have to report on any program income that you generate, and you're going to have to keep records on it just like all the other expenditures. Now, in A&A's case, they look at it as gross program income. Okay, I already talked about deduction. A&A is additional cost, so check that box 21. Okay, here's the really good thing about program income that I was telling you about. If you have some activities that actually generate program income, once your project period is over with, okay, there are no federal requirements governing the use of that program income. So it could be a revenue stream for you to support sustainability of the organization or this project or whatever you need to use it for. So program income really is a good thing, but be aware of it, track it, and report it. Okay? Now let's talk about cost sharing, which this is basically your non-federal share. Okay, I do need to make comments on the picture though. The halftime for our game of financial management is Beyonce singing. Matt picked out that picture, you guys. All right. And that was his idea of match, or who he wanted to volunteer to support his program. But all of you have a non-federal share requirement, all right? And there's some rules around the non-federal share. One, it has to be verifiable through records. We talked about that in the financial management standards, the first one, accurate, current, and complete. So you're going to have records on all your non-federal share. Okay, you can't count it for other federal programs. Say someone donates a computer to you, you know, and it's being used by an A&A project staff. Okay, you can't use it to meet your EPA non-federal share. It's like spending the same dollar twice. So you treat it just like that. It has to be necessary for completion of the project. Say that you have a language project and someone gives you a canoe, okay, for physical activity. Probably is not necessary for the completion of the project unless you're going to have classes out on the water. But that's real important to make sure it's necessary for completion of the project. It has to be allowable under the cost principles, okay? One of the item costs that's not allowable under cost principles is alcohol. So if someone donates alcohol, you can't count it as non-federal share, right? It's still not allowable. It can't be paid for with other federal funds. Now, there are certain exceptions to that, one of them being such as 638 funds, because those lose their identity. But you can't use federal funds unless you have approval or it's approved in the statute to match other federal funds, right? It has to be, it has to have been included in your approved budget. Now, for those of you that have done an A&A grant application, you know how in your budget you had your federal share, your non-federal share, right? And it, you know, how you treat it is just like you would treat any federal dollars. It might be in kind, but you still, you know, it still has the same requirements on it. So, and again, your non-federal share, which we've heard it called a million things, matching, cost sharing, in kind, whatever, you know, is a legal requirement of your notice of grant award. So it has to be in the accounting records. It follows everything else, all those same rules. Okay. Non-federal audits. Well, you can see here we have the commissioner. That's kind of like your audit. They're checking to make sure all the rules are followed, right? And for audit, the requirements on audit is that if your tribe, your college, your organization spends $500,000 or more in your corporate year, and whatever the organization, college, tribe's corporate year is, you are required to do what's called an OMB A133 or single audit, all right? And you have to do that audit. That's a requirement, and you have 9 months to get that audit done and filed with the clearinghouse. Audits are big deals, you guys. They're important, especially if you have federal funds at that level or above, because it does go to a clearinghouse and it is available for federal agencies to review in addition to your cognizant agency. So remember, you do have audit requirements depending upon your level of federal expenditures throughout the year. Now there is information on budget revisions and project revisions. I'm not going to go over that now because that's going to be covered in the next webinar that's going to be on November 7th, and that's kind of a topic all in itself. All right, I'm sorry, it's going to be on the November 21st webinar. Okay, you get reporting on the next webinar. Okay, let's talk about property and equipment. You can see throughout the stadium that there's lots of equipment. And how equipment is defined is a single item that has that costs $5,000 or more, and it's non-expendable, okay, and has a useful life of more than 1 year. That's equipment, all right? Now, if your own organization has a lower threshold, like say $1,000, they will respect that. but the maximum it can be is $5,000. And I really recommend you be at that level, you know, because there's requirements around equipment. You could have a subcategory, because I know that a lot of administration want to have additional requirements on, say, computers or things like that. But for the equipment, you know, I would actually try and use the $5,000. Now, if you capitalize at a lower level, then you'll have to live with that lower level, okay? Now, who has title to the equipment? Well, the grantee has title to the equipment, all right? And how could, this question comes up all the time, use of the equipment. What can it be used for? Well, it is to be used for the project that purchased it, whether it's, you know, even after the funding ends. So currently, you would use it for that. If the funding ends and you've sustained the project, which we hope you have for all of your projects, it's used for that. Okay, we'll say that that project totally goes away. It can be used for other federally funded activities, whether they're currently being funded or not. So that's the use of it. And then replacement, and this really doesn't happen within A&A, but with a lot of other federal programs it does. With construction projects or those types of projects, you need to replace, like say, a vehicle. You can use current equipment to replace as a trade-in when you're purchasing a new vehicle. Okay, there are very specific property records that have to be kept. And it's important to know what those are. Usually everybody keeps the description, the serial number, who bought it, who has title to it. Put yourself down. Okay, what the cost is, you usually have that, the acquisition date. This one I always see forgotten, and that's percent of federal participation. All right, in most cases it's 100%. But maybe it's a Department of Transportation where there was a 20%, you know, where the agency had to spend 20% or pay 20%, then it would be an 80%. Of course, the location, even if it's at your facility, the use, always update the condition on it, and then the ultimate disposition of it. Okay? And for disposition, what the rules are, if you're getting ready to get rid of something, you're not going to use it as a trade-in, if the fair market value is less than $5,000, you can dispose of it with, you know, without getting additional instructions. Okay, but if the fair market value is $5,000 or more, you do need to get disposition from whoever the funding source that gave you the funds to purchase it. You definitely have to have physical inventory at least every 2 years. Go count it, you know, count it. And document it. Don't just have someone go and say, yeah, it's still there. You need to document it. I think that should be done every year. I think it should be done right before audit, okay, because then they know that you're complying with this regulation. You do have to have safeguards in place to make sure that it doesn't get stolen or damaged or lost. That would be awful, all right? So you do need to have written procedures for that. And, of course, adequate maintenance procedures and proper sales procedures. So make sure you have all that stuff in place if you're purchasing any equipment. Real important on the equipment. So that's looked at. Okay, supplies. As you can see in our basketball game, we need uniforms, we need shoes, we need basketballs. For your projects, you need supplies. Title vests with you as a grantee on the supplies. Now, the only time that you need to go in to get disposition on supplies is if your project ends, the project period ends, and the value of the supplies is $5,000 or more. So that's a real key threshold to remember. Okay, procurement. I'm not going to spend a lot of time on procurement because there's a lot of regulations. And this is one thing that came up with was one of Rosia's initial questions. Now, really what we need to look at with procurement is that what's the goal of procurement? Is to get the best possible good or service at the best possible price. Just like in the draft, they're trying to get the best player. You know, you're trying to do the same thing with procurement. And one thing about that, you do need to have written procurement procedures. All right, it's important that you have written procurement procedures. And there are standards that have to be incorporated into those procedures. One is you have to have an administration system. There needs to be a code of conduct. You need to make sure you aren't buying things you don't need. They do like you to use intergovernmental agreements whenever possible and federal surplus property whenever possible. All right. You can only contract with people that are going to do the job. This is real important, and I see this missing a lot. And I see it in audits a lot. Again, that's why this is critical. There's some real common findings in audits that I review. And one is that they have not kept records that detail the history of a procurement. It's one of the top 3 findings, all right? That's a main one. So it's real important to keep those records on it. And everybody usually tries to, save money whenever possible. And they go through it, but they don't document it. All right, and then you are required to have written protest procedures. And if any of you would like some sample procedures, just contact Matt. We have some of those for you. Okay, but procurement is involved, and know that you have to have written procurement procedures. You have to follow them and really take a look at those. Okay, there's different methods of procurement. I'm not going to go into these, but there are only certain approved methods for procurement. And this is big stuff, you guys. The sealed bids, the competitive proposals, the non-competitive proposals, that's your big stuff. Okay, there, I got out of procurement fast. Now let's talk about some of the other areas in the financial management regulations. One is progress reports and financial reports. You can see that you have to keep track of how well you're doing, and that's from our scoreboard. And then the financial reports show you that, you have to keep track of all the numbers and what they mean and that. All right, now that's the one that's going to be covered in the November 7th webinar, so I won't speak to it here. One thing I do want to speak to, though, is records retention. Okay, you have to keep your records for 3 years from the date you file your final financial status report. So that's a key date, and you have to maintain those records. You do, if you're subject to audit, you do have to have closed audits. You can't be in litigation on an audit or have an open audit. You have to have finalized your audits. All right, so there is. Now, I'm not talking about like the IRS requirements of the 7 years for personnel records and payroll records and that. I'm talking about your project records here. So don't be throwing your payroll records away after 3 years. You'll get in trouble. Okay, and then for closeouts, there are some regulations that govern closeout. One, you do a final performance report. You do a final financial report. You have to reconcile your cash. All right, which means that you make sure that you've only drawn down what you've spent, but make sure that you draw down, what you've expended, so it's not sitting in the payment management system, okay, because it'll go away after a certain point. You never get it. The other one is that if you guys invent anything out there, you have to file an invention disclosure report, and please send me a copy because I've never seen one in my life, all right? And then the 5th one is that if you have any federally owned property, you do have to file a property report, such as if you live by a military base and they have, they haven't given it to you, but they're letting you use something that they have, a bulldozer or a wood chipper. That's what one of our guys needed once, but they're not giving it to you. They're just letting you use it. Then you have to file a report on the federally owned property. So not so bad, huh? That's rule book number 1. That's the financial management regulations. Next, we're going to go into rule book number 2, and that's called the cost principles. Okay, and where those are located, okay, this tells you about what you can spend the money at and where you'll find it. They've just moved. They're called, I'm sure some of you have heard the term OMBA 21 or 87 or 122. They've actually moved those all over to Code of Federal Regulations. And then for educational institutions, it's Part 220. For governing bodies, it's Part 225. for nonprofits is Part 230. So that's where you can find them now, and then we're going to show you how to get there when we get done here in a little bit. But basically, there's 4 areas that are covered in the cost principles, all right? Now, for those of you that are program directors, just like Pat Riley manages the Heat, the Miami Heat, the basketball team, you guys need to manage the costs. And it's real important that you have a working knowledge of these cost principles, okay? Now, the general principles are they have to be necessary, all right? So it has to be a necessary cost, not just because we have money, all right, or it's the end of the year and we haven't spent all our grant funds. It has to be necessary. They have to be reasonable. You may have approval to develop a website, but if you spend $50,000 on that website, that could be determined not reasonable, depending upon what it is, all right? And so there again, even though it's an allowable cost, it still has to be reasonable. The third one is that you have consistent treatment of costs. So you can't charge, you know, if everybody's in the same office, you can't charge one program $15 a square foot and another program $5 a square foot because they don't have as much money. There has to be consistent treatment in how you apply it. All right, and then, and I'm still in the general principles, you guys, they also have to be allocable. You have to be able to allocate those costs to whoever benefits from the expense. So those are 4 things just under general principles to be aware of, especially if you have approval authority of costs. The second area that's covered in the cost principles is cost allocation. Okay, if you have a cost that benefits multiple funding sources, you need to allocate those costs. It can't just be, well, we have 2 programs, so we'll split it, even though one program takes up 90% of the office space or, you know, uses 90% of the resources. The key here is there has to be a basis for that cost allocation. You know, whether it be based on, like, say, for the base cost for a telephone, you may want to do it based on how many phones or handsets you have, you know, for each program. Or you may want to base it on FT, full-time employees for each program. Whatever it is, it needs to make sense, one, but there has to be, this is the key word, a basis for the cost and how you allocate. Okay, the third area covered in the cost principles is indirect cost. Now, indirect cost is you have to negotiate that with what's called your cognizant agency. All right? And you do that every year. And typically you'll go in for an indirect cost when you, if you have a lot of different grants, you know, and they have costs that are common and joint, and it's really hard to identify what to charge to who, all right? But you negotiate that with a federal agency every year, and then you can charge each program whatever that cost is. And it's much more complicated than that. Just remember, it has to be negotiated with a federal agency. You'll submit a proposal every year. You'll get a negotiation agreement back, and that's what's allowable. Keep it current. Keep it current. I cannot stress that enough. That really needs to stay current so that you can charge it, you know, to your different funders. Okay? And then the last thing that's covered in the cost principles is selected items of cost. And each cost principles, they cover the same items. You know, it's advertising, you know, personnel, it's called compensation for personal services, supplies, all of those. And what they do is they tell you if it's allowable with prior approval, or if it's not allowable. Now, you really need to know what the non-allowable costs are. I mean, they're basically like alcoholic beverages, bad debts, contingency provisions, donations, when you're making the donation, entertainment costs, fines and penalties. Okay, there's a number of them. Goods or services for personal use, So you really need to know what those are. And no one can tell you you can spend money on it, all right? And that's the important thing to remember. Now there's others that require prior approval, and that comes into play when you're looking at your line items, you know, and say that you want to, you need to add a line item. Well, you need to look to see if it requires prior approval, and if so, then you'll have to go in and request approval from your funding source. But that's kind of the 4 things that are covered in our second rule book, all right? And that's called the cost principles. So that goes hand in hand with the financial management regulations. We're almost there, you guys. Okay, and the third rule book is called the HHS Grants Policy Statement. And that's kind of the referee's rule book. And this one, it's really, really good to know, even though this is for like your grant specialist, all right? This is like knowing what they're looking for and what they want to see. And so I think it's good as a reference. You may say that you were wondering about a budget modification. Well, go to the grants policy statement, and that tells you when you have to go in for budget modifications, what your federal grant specialist is going to say about budget modifications. So I think this is a good supplement to help you as you move through the management of these funds. It's basically divided into 4 parts, okay? Breathe easy, you guys. I'm not going to cover all 4. Okay, the first one is about the grants process. Now, I found it good reading. I don't know about you guys, but it kind of explains from a federal perspective the whole grants process, all right? This part 2 is what I really like. That's called the terms and conditions of HHS grant awards, and that gives you so much insight into, you know, what they're looking for in a modification, you know, how they define terms, what they're looking for in that, what they're looking for when they're looking at your non-federal share costs and things like that. So I really do find that to be kind of a very interesting document to read, you know, once you've made it through the regs and the cost principles. And then the part 3 and part 4 really are kind of specific to federal employees. So I'd say, you know, glance at 1, read 2, you know, 3 and 4 is, you know, that's okay. All right, but there you go, you guys. You've made it through all 3 rule books. That wasn't bad, was it? Let's go back to Rosia's questions now and see if we have some answers for that. Okay, Rosia? There's her team.
Hi, Talafalava. For those of you who joined in the session or the webinar later on, I'm Rosia Tavita with the Fitual Samoan Language Center, a new grantee. And as financial officer, these were some of the questions that came up from our project or program manager. So, do we have to get cost quotations for everything we buy? In reviewing the procurement requirements in the financial management regulations, I realized that it was based on our own financial policies and procedures and the cost of the items we were going to buy. So for Le Fitual and our policies, anything that costs a single unit item that's $100 or more, we ask that they provide at least 3 cost quotations. The second question, we want to send an extra person on an out-of-area trip. How do we go about it? We will have the funds in the travel line item. However, the trip is out of country and the cost principles require that the organization get prior approval for all foreign travel. The third question, can we use grant funds to purchase t-shirts for the students? Okay, the budget, in our budget, it includes promotional supplies. So in assessing the expense, the project manager, Isapeta Alemalata, she's on our webinar, stated that the t-shirts were for the students to wear when on field trips. As supplies are an allowable line item in the cost principles and the students will wear them on field trips, it was determined that they would be promotional and therefore allowable. The last question, can we purchase toilet paper for the school? Again, supplies are an allowable cost, which would make that an expense that's allowable. Thank you, Fastai.
Okay, thanks, Rosie. That was great. All right. Well, we've come to the end of our webinar. Does anybody have a question? You guys all going to manage your money perfectly? Matt, you have a question?
I just wanted to show people how to ask a question if you have one.
Really?
Yeah, near my name, you'll see that red hand icon. Just click on the raise hand button and you'll enter the queue. You can either talk on your computer's microphone using the talk button on the left, or you can type your question into the chat box. We have a question from Helen Tupaki. Can we access the PowerPoint presentation online? Yes, you will be able to access a recording of this presentation in about a week. We need to get it captioned, and then we'll post it online. And you can find that in the ANA website in their resource library. And then I'll send out the actual PowerPoint file to everyone who registered for the webinar after we're done today. Okay, we have a question from Elisa Petta. You want to take that, Susan?
Sure. What's your question, Elisa? Elisa Petta. Okay, she's typing it in now, you guys, so as soon as she gets it typed in, I'll tell you what it is. Oh, how do we report on in-kind office space or space? Okay, what you do on that is what you're going to have to find. Now, it depends on who you get it from. If you're getting it from a regular landlord, all right, and they lease out other parts of the building, you can just ask them to say what the value of it would be and submit a letter to you of what the value would be and what they're charging other people for it. And then you would just track that. You'd have that record of it on file. Or say that you're using a community building where, you know, it's built with HUD funds and they don't really lease anything. What you're going to want to do is you're going to want to find comparables in the area if you had to go out and lease it, and document all those comparables and then use that and keep that in your file. Okay? Does that answer your question? Okay, good. Okay. Then we have another question coming up. Okay. We have 3 days to have cash on hand. How do we prove that we have spent the cash within 3 days? Well, basically what's going to happen in that situation is that at the end of each quarter, and I don't want to get too much into reporting, you're going to have to file a report with the Division of Payment Management, and they're going to see, part of that report says current cash on hand. They'll look at what you drew down, what your expenditures were, and what your cash balance is. All right, and you can pretty much tell from that. If you drew down $20,000 in 3 months and you spent 15 and you got 5 there, clearly you have excess cash on hand. The other time it will be checked, and this is real important, is if you are at the threshold where you have to get an auditor. That's one of the things the auditors check as they, when they're performing your audit. And so you really don't need to prove it to them. Just make sure you say that. And there are different ways that it gets checked. One, through your quarterly report, and the second one, if you are subject to audit, when the audit happens. All right? But that's a great question. That's a great question, because they're not going to be looking into your bank account. Okay? Any other questions? Did that answer yours, Kelia? I don't know if I pronounced your name right. Okay, great. Got anything else? We good? Okay. Okay, Matt. It's all yours. Thank you so much, everyone. I know this isn't the most exciting topic, but it's really important. Trust me, it's really, really important.
Thanks, Susan. That was a really good presentation. So thank you, everyone, for joining us. These are some resources that we mentioned during today's webinar. So if you want to find, some parts of the Code of Federal Regulations, you can go to this website, ecfr.gov, and it should take you to a page where you can just type in the section that you want to read, and it'll just pull it up for you. So it's a good resource to have on hand, and you can refer back to the sections that Susan was talking about earlier to determine what's relevant to your project. Then the DHHS grants policy statement should have been cited on letters of grant awards if you've received them already. And I know some of you are not current ANA grantees, and so you should be able to find that on the DHHS website. And then a lot of other resources are available in the online ANA resource library. You can find that on the ANA website. Try to find their resource library, and the URL is here, acf.hhs.gov/program/ANA/resource-library. And there you'll find our post-award manual. It's a big PDF with all of the updated ANA rules for your post-award training. And then you'll also find recordings of past webinars, including the first part in the ANA project implementation series, which happened a couple weeks ago. This is part 2, and then part 3 and 4 will be coming up in November. So we have some other webinars happening in November for those of you who join us a little later. On November 7th, we have part 3 of this series that we're in right now. The next part will be on reporting, and I know some of your questions kind of would be a good segue to getting into part 3. So they'll be covering a lot of the ANA reporting during that part. On November 14th, we have a webinar on preparing native language teachers. November 20th, grantee governance success stories, and on November 21st, we'll have the final 4th part of the project implementation series on continuations and grant amendments. So be sure to sign up for those, and once again, you can sign up for all of them at the events page of the ANA website. And you can see it up there, acf.hhs.gov/program/ANA/events. But just find the ANA website and click on events. And so if you have any more questions, you can contact our office. My name is Matt. I'm the Outreach and Technology Specialist at the Pacific Region TTA Center. And my contact info is there on the screen. And if you have any questions, or if you have any questions for any of our presenters today, or if you want additional resources, feel free to give me a call or email me, and I'll get back to you as soon as possible. And thanks a lot for attending. At this time, I'm going to stop the recording, and if you could help me by filling out a survey, I'd really appreciate that.